Let's welcome Sudip Bandyopadhyay, the Group Chairman at IndiTrade Capital on board. And Sudip, thanks so much for joining us on the show. Now, I want to draw our attention to a couple of names from the entire defense pack today. We've had two very bullish notes coming in from Elara as well as Phillip Capital, highlighting how they could expect fireworks when it comes to the defense sector next year. What's your take on the names like HAL, Bharat Dynamics? Tell us, what are you making of the entire defense pack now?
Well, defense, of course, is an area where there is a lot of action, and undoubtedly the buoyancy will continue in the defense space. Make in India, as far as defense is concerned, has been a huge success, and rightly so. The opportunity of Indian defense companies to supply to the global market is also very much there. So some of these companies, which are let's say in Mazgaon Dock or Cochin Shipyard or Garden Reach Shipbuilding, I think all these have got a very significant long-term potential. We are also extremely bullish on defense electronics. So Bharat Electronics continues to remain our favorite stock. The question is the valuation. I think everything else, as far as defense is concerned, is absolutely perfect. The valuation needs to be carefully looked at before buying into some of these stocks, because undoubtedly they will continue to get orders, they will continue to do well. But are we picking up the stock at a valuation which is full, rich, or kind of they are overvalued? That is what the question is. So according to us, I think Bharat Electronics, being in the defense electronics, being a very well managed company, having scope in all three arms of the armed forces, which is Air Force, Army, and Navy, will have a significantly long runway going forward. The order book is full, continues to get orders, and I think the execution has been exemplary. So Bharat Electronics has been our favorite stock and will continue to remain our favorite stock. There has been a bit of a correction in the recent past, and this probably is an opportunity for a long-term investor to buy into Bharat Electronics.
Electronics is one stock which can be good for long-term investors. Sudip, hi, Anisha also joining in the conversation. Well, the year 2024 was marked by the kind of flush that we saw of IPOs and the kind of money that got drained out as far as the primary market is concerned, if at all. In 2025, we have interesting names lined up, right from ALG to perhaps an OYO to Tata Capital, which is in news today, to a Flipkart. Anything that you're watching out for closely as a big IPO candidate that you might be interested in for 2025?
Well, Flipkart will be an interesting IPO, and we will definitely watch that. This will be a unique kind of a company which is coming to the market. Amazon, of course, is not in the market, and so we will not know the relative position of Amazon in India. But Flipkart definitely will be a good IPO to look at. I am also interested in OYO. They had tried a few years back. Things didn't work out. They are again coming for the IPO. It's an interesting business with a lot of traction, and travel tourism doing so well. I think OYO will also be watched very, very keenly. Of course, Tata Capital again is an interesting IPO which is being talked about since today morning. A lot of Tata Group companies got excited because of the possibility of this IPO. So to my mind, OYO, Flipkart, and Tata Capital, if that is true, IPOs will be looked at definitely. Very interesting IPOs and will be watched keenly.
Okay, well, but let's also revisit the year that has been 2024 for the IPO space. Lots of action coming in from the primary market. We've had some very marquee listings coming in next year, and also to keep an eye forward on what we can expect in the primary markets over the course of next year. Let's bring on board my colleague Gaurav, who's here with a snapshot of what this year has shaped up to be like for the IPO world.
When we talk about 2024, it is definite to say that IPO was one of the biggest hits in 2024. In fact, when we talk about some of the numbers, in 2024 itself, we have seen the record-breaking number in terms of number of deals as well as number of value of deals in terms of secondary market activities. We have crossed around 1.6 lakh crore rupees in terms of value in 2024 in terms of values. At the same time, this is also was a record-breaking after the year 2022. Let's not forget that it is not just this. We have also seen the biggest IPO of India in 2024. Earlier it was at LIC, which raised around 21,000 crore rupees. But in this year, we saw Hyundai Motors came up with the IPO and they raised around 27,000 crore rupees via IPO. And it was not just the IPO size. Even with this size of IPO, we saw subscription hitting more than 2 times for Hyundai Motors. So definitely there was some euphoria, as well as there was some positive response in terms of IPOs. Other than that, let's also look out at some of the companies who were there and who were actually buzzing. The mainstream IPOs and the highlight of the 2024 remains with Hyundai Motors, Swiggy, NTPC. Then we have got Vishal Mart, which was recently listed. Other than that, we also had some new age technology like Ola Electric and Mobility, Vari Energies. These were some of the hit IPOs where we saw a tremendous response, as well as a size of the IPO was actually significant. Other than that, when we talk about these players, it was not just the size. These players also outperformed the market. So when we talk about Swiggy or Bharti Hexacom, these companies not only delivered good returns when it comes to listing, but also delivered good returns after listing. We have got Swiggy, who delivered more than 40%, Bharti Hexacom more than 40%, and at the same time we also had some of the multi-baggers in terms of IPOs. So we have got Jyoti CNC, Premier Energies, who delivered more than 200% of the returns post its IPO. Other than that, we have got Orient Technologies, EPAC, Platinum Industries. Now you may think that 2024 has now ended and we may not see that rally, but it is not true. In 2025 itself, we are seeing some kind of same pipeline for IPOs. In fact, when we talk about numbers, we are getting 34 companies who have already got approval for the IPO perspective, and 55 companies are already waiting for approval. These 34 companies can raise up to 50,000 crore rupees in 2025 itself, and the 55 companies who are waiting for approval may raise around 1 lakh crore rupees. And in fact, when we talk about these companies, 2025 might be a year where we may see the holding companies actually listing their subsidiaries, and that is the reason why this is going to be special. So we have got some big names here. We have got HDFC Bank, Hero MotoCorp, who may come up with their subsidiaries IPO. We have also got Reliance Industries. We know that Reliance Jio has been in talk of IPO, and it has also been a big short player. Also, when we talk about some other players like Prestige Estate, Canara Bank, they are already listed, waiting for listing. Other than that, we also have some mainstream IPOs which may come, which is LG Electronics, NSDL. Then we have got Hexaware Technologies. So a lot of things are going to come in 2025 as well. So definitely 2024 was a big year for IPO, but let's not forget that 2025 also has a strong pipeline. And on back of this, we will be definitely watching out on new companies and new listing and how they trade for investors in coming years.
Okay, so the primary market action will continue to be heated in 2025 as well. Naresh, but what's heated right now is the chart of RBL Bank doing quite well, and the other one is Tata Chemicals. It's come off from the highs of the day, but still going strong in that sense.
So if you look at RBL Bank, it has been making bounce backs, but again back to the same prices. So it made a bottom around 155 on the gap down day when there was an announcement. 150, 154 levels, bounce back again towards 180. Now we went back to around 150 again. Today we are back to not even crossing previous day's highs above 165. So it's just a bounce back. But the fact remains the stock has gone nowhere for a long period of time. It's available at the same prices where it was in June 2020. So it's a risk reward area wherein it can make a full reversal out here. So RBL Bank still looks interesting.
That's a take coming in on RBL Bank on the charts. But Sudip, want to come to you, draw attention to the real estate space. Every single day, for the last couple of trading sessions, we've had some or the other news flow that's coming in for Nifty Realty. It's done pretty well as an index on the year-to-date basis as well. On the week-to-date basis also, that index has done pretty well. In fact, top gainer on the week-to-date basis, 1.5% uptick. Tell us, what's the sense that you're making of the real estate space? Because you have announcements coming in from Prestige. Today, you've had Oberoi Realty. A whole chunk of brokerage notes coming in with very bullish views coming in on Oberoi Realty as well. Tell us your view on that stock and the overall sector also.
Well, I've been positive on Oberoi Realty for a long time, and I continue to maintain my view. Valuations have reached a certain level, but I think if you're a long-term investor, there's absolutely no problem in buying Oberoi Realty even at current levels. The project pipeline, the quality of construction, and the real estate demand all justify the kind of recommendation as far as Oberoi Realty is concerned. Overall sector, our view has been positive, and we believe that when eventually interest rate starts coming down in the economy, things will improve even from here on. Look, real estate moves in cycles, and I think we are somewhere close to the middle of an upswing as far as real estate is concerned. It started post COVID, the first phase of the COVID, and I think it's going to continue for the next few years. So this is a great time for real estate companies. Amongst other companies, Godrej Properties is one of our other favorite stocks, and again that does look good for long term.
That's the sense coming in as far as real estate pack is concerned. But Kunal, it does seem like we are headed back around the 23,700. If we go below that, does the texture of the market change?
Yeah, it does to a larger extent, Nisha, because what this could also confirm could be a third consecutive day of close below the 200 DMA. So it's not just the level in terms of prices, but it's level in terms of indicators, which I think could be a concern for the benchmark indices. And we've seen historically that whenever the index has struggled to surpass above its long-term moving averages for a sustained period of time, it actually results into the index, drifting into a bit of a sluggish trend on the downside. And I think it also then depends on which are the kind of sectors which get back into a zone of weakness. So for example, right now we're seeing metal stocks getting into a weaker zone, PSU banking stocks seeing slight bit of profit booking or correction amongst themselves. You've seen the IT stocks, and especially the mid-cap IT names, slipping over the last few trading sessions. So I believe that when you have such kind of a level for the indices which is trading below its long-term moving averages, it adds to the pressure amongst a lot of sectors which have been historically doing pretty well for themselves.
Okay, well, time to take some BTST trades coming in. Naresh, you go first. What's your BTST trade?
So first would be a buy on ITC. The stock is trying to make a short-term breakout. Stop loss at 475, target price of 487. Second is a buy on Indigo. The stock broke out today above the recent swing highs. Good momentum here. Stop loss at 4570, target price of 4700.
Okay, so Kunal, coming to you, what's made it to your radar? What's your BTST trade coming in?
So I'll go with the buy on ITC, which I recommend in the morning, looking attractive. The stock confirming a breakout above its 50-day moving average. So expecting the targets to be same at 488. Stop loss could be kept now trailing towards at least 470 mark for ITC. And on the second side, I would believe ICICI Pru is a stock which is showing initial signs of a recovery after being into a downtrend for almost like the last 4 or 5 weeks. So looks like the stock could get back into a recovery mode. 690 could be an immediate target for the stock, and stop loss could be kept at 640.
Okay, so those are the top recommendations coming in from our technical experts. But Sudip, I understand this is perhaps going to be our last conversation of 2024. If you had to name a big theme of 2025 or call out a big stock, what would that be?
Well, I think my call would be on Reliance. I think the value unlocking process will definitely start in 2025. We are already talking about Reliance Jio IPO. There will be something happening as far as Reliance Retail as well. So, if I have to pick up one stock, I think that will be Reliance Industries, where things should happen in 2025. If I have to pick up, one theme, I would pick up life insurance, and there I'll pick up LIC. I believe that a lot of reforms are being proposed both by IRDA as well as the Government of India. Now, one area which everybody is targeting is reducing bank assurance so that banks, the advice of banks is not polluted by their commercial interests. And that does affect pretty much all the large insurance, life insurance players, except LIC, because their bank assurance is insignificant. So LIC definitely will be, getting a unique advantage when bank assurance gets restricted. The second thing which is being talked about is life insurance companies getting permission to sell non-life products and vice versa. Now look at LIC with the kind of network it has. As and when this approval is in place, I think they are uniquely positioned to become a very large health insurance company to begin with, and then maybe other general insurance products as well. The kind of network LIC has, I'm pretty confident that they will be a different company 1 year down the line, assuming these reforms get through sooner than later. So LIC is the other theme which I want to definitely consider.
LIC looking very attractive to Sudip heading into next year. But also time now for some more interesting opinion on the markets. We caught up with a whole host of experts, the likes of Gautam Shah, Navneet Manoj, as well as Shankar Sharma, to understand where one should park their money in the new year. Let's go across and listen in to their future outlook.
Real estate and metals. I think the way DLF has come back, Loader Developers has come back, Shobha has been sustaining. I think real estate is going on to make new lifetime highs and beyond. And metals, I think after all the news flow that we got from China, is just setting up for a move back to lifetime highs. So these two pockets of the market, we remain quite positive.
In next 20 years, China will lose 20 crore people in its workforce because of the aging. And now the population has started declining. India will add exactly the same number, few million here and there, 20 crore people to its workforce. So 20 crore addition and 20 crore deletion. So if somebody has to produce now, despite all the efforts that Trump will make, and I'm sure they will have some success on reshoring or friendshoring and whatever. But India really has once in a generation, once in a lifetime opportunity to get manufacturing back.
Big top-down, gold appears to be a fantastic structural trade due to a variety of reasons. Too long to go here, but I think it's a secular trade. Investing in tech within India itself, because I do believe that companies that are leveraging AI, leveraging stuff like that, will be huge winners.
Renewable energy has been a big theme that has been working out well. It's a focus area of the government, and now it seems that financing is something that is going to get easier for the renewable energy projects as well. That's the detail that my colleague Prakash is picking up. Let's take it across to him to get more understanding of what the story really is. Prakash, take it away.
Yes, we are learning from our sources that the government is likely to take several steps to speed up funding for renewable energy projects going forward. We're given to understand that the Ministry of New and Renewable Energy is preparing a proposal to approach the Finance Ministry very soon. In fact, the Ministry is in favor of enhancing priority sector financing beyond rupees 30 crore, and that too on the basis of size of the renewable energy projects. We are given to understand that the industry has also approached the government to include new sources of renewable energy under the ambit of priority sector financing that include projects like green hydrogen, green ammonia and battery storage. Sources are suggesting that the Ministry of New and Renewable Energy is also in favor of imposing financing obligation on banks for renewable energy projects. We are given to understand that the Ministry of New and Renewable Energy is likely to hold stakeholder consultations in mid-January next year, where a host of issues will be discussed with the banks and renewable energy companies. And then all these issues will be discussed with Finance Ministry and RBI officials. That's a very significant development coming in. As you are aware that India needs more than 32 lakh crores of investment in RE sector in next 6 years to meet 500 gigawatt renewable energy capacity.
Okay, so that's the exclusive word coming in on the financing of renewable energy projects, the potential ease of that as well going ahead. Prakash, thanks so much for taking us through that. Kunal, give us a sense of what these energy stocks are looking like on the charts to you, because if you take a look at the month-to-date December moves coming in, Nifty Energy is the biggest loser across the board, a 6.5% cut coming in. Tell us what sense are you making of this index, and would things look better for all of these stocks if this exclusive that Prakash has just given details to us about, if that actually happens and turns true?
Well, in fact, this has been one space where there's not just been a correction, but there's been a significant trend on the downside for many of these names. So first on the Nifty Energy Index, from a point when the index was almost at 45,000, 46,000, I think mid of August or start of September, towards a point where the index has fallen down by almost 9,000 to 10,000 points, now on the verge of breaking below 35,000 levels. So that's a very sharp correction. The manner of the breakdown for the index has been to a clear pattern of lower highs and lower lows. And even in the recent past, like for example the end of November, start of December, where the markets took the Nifty took a rally of almost 1,500 points. Even in that kind of a scenario, this index continued to form a lower low pattern for itself. So that's a concern for Nifty Energy Index. The index right now is drifted almost 10%, more than 10% below its 200-day moving average, which means that there could be a possibility that the index may drag for some more time, and there could be a time-wise consolidation. But I don't see any major revival coming back into the Nifty Energy Index as such. Even if you look at the components, for example, the likes of REC, PFC, NTPC, etc. Many of these stocks have given significant breakdowns of sorts, and these are low beta names. So when low beta stocks, they get into a correction mode, the correction starts to convert themselves into a trend. So that's the concern for many of these names, that it's not just been a short-term correction or a mean reversion phases. There have been significant evidences on the charts that this has been a major downtrend for many of these stocks. We'll have to wait out for a revival for the many of these stocks and confirmation of a breakout. So if that happens, only then I would expect a recovery or a major uptrend come back into Nifty Energy Index. As of now, the evidence is not there for any kind of a major uptrend or revival into the index as of now.
Okay, not looking at a major revival of sorts when it comes to some of these energy names or even the power ancillaries, the likes of PFC, REC, etc. But Sudip, what's the sense on revival in consumption? And I'm not talking about the affluent and the higher end of the K-shaped kind of spend that we are seeing. I'm talking about the mass segment. Do you think value is now available on the table to take a dip in some of the staple FMCG names, or still some time away with respect to calling that recovery?
Absolutely, there is value on the table. Look, we are a country with 140 crore population. We have a bunch of companies in the FMCG space which are pretty well managed and run. Yes, they had a challenge as far as rural demand is concerned. Then rural picked up, urban demand slowed down, and they're having challenge as far as urban demand is concerned. But I strongly believe that Q4 onwards, we will see pickup in demand, and the green shoots, initial green shoots are already visible when you find inflation coming down and things like that. So I am a believer in the fact that this is a great time to pick up some of these top quality FMCG names and build your portfolio. Maybe a HUL, maybe a Dabur, maybe a Britannia. And we have seen some amount of value buying in these counters in the recent past, and probably that trend will continue in the near future as well.
Just a counter on that note, you spoke about a bunch of stocks that are looking good from the consumption space, the likes of Dabur, HUL, Britannia. All of these stocks are gearing up to undertake price hikes in the near future or spilling over to the next quarter. You have that on one hand. You have the other headwind coming in that palm oil and other commodity inflation continues to persist. Do you believe that even amid headwinds and challenges like this, FMCG could continue to do well going ahead?
Absolutely believe. Look, the turnover growth of an FMCG always depends on a combination of volume growth as well as price increase. So it's a combination. Sometimes it's 2/3, 1/3, sometimes it's 50-50. So this combination takes the turnover of FMCG companies forward, and that is pretty much the case. There has been an inflation. They haven't been able to take price hike for some time. They have done some readjustment of the pack size, but price hike is in the offing. Obviously, you pointed out rightly that palm oil prices have gone through the roof, and some amount of correction, particularly the major consumers of palm oil, which is the soap companies, the Marico. I think they need to take price hike, and they will take price hike. But it doesn't stop people from consuming, and I think consumption as a theme, particularly for the FMCG products, will continue to remain robust. One or two quarters this side, that side, doesn't change the long-term story of India, which is 140 crore population and growing.
Okay, point taken. So have to see what's really happening with the consumption sector, not only from a demand point of view, but a supply point of view as well, because a lot of raw materials have been haywire. Talking about haywire, it's the market which is like that at the moment. You have us at around the 23,730 thereabouts. So we've managed to hold on to 23,700, but let's see where we head when it comes to the day of expiry, because overnight we're not going to get many cues. A lot of markets across the globe are shut on 26, which is Thursday. Of course, the UK market will still be shut for Boxing Day, but I guess as it is activities on the lower side towards the end of the year, and that's exactly perhaps what we are waiting by for, that finally some news flow could ebb off and we can have perhaps somber end to the year, because it's been a very, very hectic year with the kind of news flow that we have seen, right from elections to the IPO market to all the news flow that has been surrounding the central banks as well. But we'll have more data come by, so initial jobless claims data, as well as I think HUDCO is the one which is going to have a meeting on Thursday to discuss fundraising and the lock-in ends for one of the important companies as well, right? Which one is that?
Green Energy. The lock-in period will be ending for that stock as well. So that's also going to be an important stock to watch out for, because Anisha, recently we've seen that every time there's a lock-in period that's ending for a stock, we've seen some volatility coming in, and similar was the case for Swiggy when a few days ago the lock-in period for Swiggy got over, and you had a significant amount of equity that got out of lock-in of the anchor investors as well. So there was some volatility that came in on the charts of Swiggy. Let's pull up that chart and take a look at what that stock is up to. Last 1 month itself, there's been a 35% uptick coming in. JP Morgan has given some very ambitious targets coming in for Swiggy, the highest in fact that we've seen in a very long time coming in from a brokerage for Swiggy. That's 730 rupees per share is the price target that JP Morgan has given going ahead. So that's a stock that's done well. Kunal, very quickly give us a sense of what you are spotting on the charts for Swiggy.
So a very limited price history, but then over the last 1 month or so, the stock has looked very, very strong, attractive. There's been a very good built up of volumes. Whenever we've seen the price action to be a lot more robust, and when the stock gets into a correction, like for example in the last 2 days, we've seen the average volumes drop down to just about 1.5, 1.2 CR for Swiggy. Whenever the stock consolidates, and when the stock was moving up higher, the volumes were to the tune of almost 3x to 4x from an average volume of 1 to 1.5. So which means that we are looking at the stock getting back into an uptrending phase, and this dip opportunity in the last couple of days which has happened for Swiggy should be taken as a good buying opportunity. 560, 565 seems to be a good base, and on the upside we could be looking at 620 as a near-term target for Swiggy.
If you like this video, then like, share and subscribe to ET Now.